Subscribe to our channel and click on the bell button to receive important financial updates faster than anybody else.
Friends, welcome to another video on your channel Profit in Equities. In this video, we'll be talking about a small cap pumps manufacturer which is dirt cheap and is poised to be a future multibagger. The company has a huge opportunity ahead in the sector, has leadership position, is focused on a single segment and has good return ratios and strong growth visibility. Please watch this video to know more about the identity of this stock. Now the company in question is Shakti Pumps India Limited, which is available at Rs 423.70 and the face value for it is 10. The symbol for it is SHAKTIPUMP. Now Shakti Pumps surprised the market with an expansion in earnings and profitability led by growth in its core business. The stock saw a strong surge in trade on Wednesday before closing the session with a gain of 6.64% at Rs 447.8 per share. This year the stock is flat even when mid and small caps have fallen sharply. The reason for Wednesday's rally was improved performance, particularly when investors had very little expectations. To put things in perspective, the management was cautious as a result of delays in some of the flagship programs of the state and the resultant increase in inventory and slowing growth at a time when investors were building 25 to 30% growth in sales. Revenues in the June quarter grew at a mere 6.8% to Rs 96 crores. The management said it hoped that some of these orders will fructify in H2 FY19. The quarter gone by saw a spurt in sales which grew 104.9% to Rs 138.7 crores. While an increase in direct expenses such as input costs for metals and energy had a negative impact on margin, the overall impact was negated as a result of huge operating leverage in the business. Operating profit grew 92% in Q2, but because of the relatively lower indirect expenses such as interest costs and depreciation, it was able to deliver a strong 207% increase in net profit to Rs 9.27 crores. Now the stock has not corrected much this year, and that shows its strength in a weak market. In FY19, there is an expectation for the company to report an annual profit of about Rs 45 crores. The valuation currently is reasonable considering the opportunity in the sector, its leadership position, focus on single segment, healthy return ratios, and strong growth visibility. Now friends, please don't consider this to be a recommendation on our part. Please go ahead and do your own research. This and all of the content that you see on our channel is intended to be a piece of news. Also, it's not our own research. We'll be providing a link to the source for this video in the description section. Thanks for watching, and if you have not yet subscribed to the channel, please consider doing so.